Given the bullish price forecast for Bitcoin over the next week, the strategy will be to take a long position. The entry price should be around $68,500, allowing you to buy in before the price potentially reaches the predicted resistance. A stop loss at $67,000 protects your downside, limiting potential losses. Target price is set at $72,500, aiming to capture a significant portion of the predicted upward movement. This strategy focuses on the short term, capitalizing on the expected price increase over the next week. This approach leverages the positive price momentum indicated by the forecast while mitigating risk through a well-defined stop loss. The long-term outlook for Bitcoin is inherently uncertain, and this strategy specifically targets the short-term opportunity presented by the current price action and forecast. Based on the provided Ethereum price history and forecast, a cautious medium-term investment strategy appears most suitable. Price history reveals a period of consolidation followed by a recent dip, suggesting potential for a rebound. The forecast indicates a gradual upward movement, aligning with this optimistic outlook. However, the historical price data also shows periods of volatility, emphasizing the need for a measured approach. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase. An entry price around $2,560, slightly below the current price, would allow for a margin of safety. A stop loss at $2,500, a significant support level, would help mitigate potential losses. The target price should be set at $2,700, factoring in the forecast and aiming for a reasonable profit margin. This strategy balances risk and reward, allowing for potential gains while minimizing potential losses in the medium term. Based on the provided price information for Ripple, a cautious medium-term investment strategy appears most suitable. The recent 2-week price history demonstrates a downward trend, with the price hovering near its support level of $0.5257. While the forecast suggests a slight upward movement in the coming week, the overall trend remains bearish. Therefore, a short-term investment position is not recommended due to the potential for further price declines. However, the current price level, coupled with the forecast indicating potential for slight gains, suggests a medium-term investment strategy with a long position. An entry price around $0.528 could be considered, aligning with the resistance level and the potential for a price rebound. A stop-loss order at $0.5257, below the support level, would help mitigate risk. The target price could be set around $0.5383, the resistance level, aiming to capture potential gains from a price surge. This strategy allows for a balance between risk and potential reward, taking advantage of a potential short-term price rebound while acknowledging the overall bearish trend. Given the price trends and forecast for Solana, a medium-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $171.71 and the forecast suggesting further price increases up to $191. This indicates a bullish outlook in the medium term. To implement this strategy, consider an entry price of $175, aligning with the recent price action and providing a margin above the support level. Set a stop loss at $171 to protect against unexpected price drops. Target price should be set at $188, a conservative yet achievable target considering the forecast and historical price movements. This approach allows you to capitalize on the potential for upward momentum while managing risk effectively. Based on the provided price information for Cardano, a short-term investment strategy appears promising. The historical price data reveals a recent upward trend, with the current price hovering near the support level of $0.3496. The forecast suggests continued growth, with prices potentially reaching $0.371 in the coming week. This upward momentum, coupled with the proximity to the support level, indicates a favorable entry point for a long position. To implement this strategy, consider an entry price of $0.35, a stop loss at $0.349, and a target price of $0.365. This approach allows for potential profit from the anticipated price increase while minimizing risk by setting a stop loss below the current market price. The target price is strategically positioned to capitalize on the forecast's upward trajectory, offering a reasonable return within a short time frame. Based on the provided price information for SUB coin, a cautious investment strategy suggests a short-term approach. While the historical price data shows some volatility, the recent 2-week price change indicates a downward trend. The forecast also points to a continued decline in the coming week, with prices potentially dipping below the current levels. This bearish outlook warrants a short position to capitalize on the anticipated price drop. An entry price of $1.98, aligned with the recent price action and slightly above the support level, offers a reasonable starting point. A stop loss at $2.07, slightly above the entry price, helps mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $1.94, aligning with the support level and providing a potential profit margin. This strategy prioritizes risk management and aims to capitalize on the short-term bearish momentum in SUB coin. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. While the historical prices show some volatility, the forecast suggests a slight downward trend in the coming week. Price is currently near the resistance level of $3.862, indicating that an upward breakout might be challenging. Therefore, a short position on Filecoin is advisable to capitalize on the potential for a price decline. An entry price around $3.75, aligning with the current price and recent historical highs, would be suitable. The stop loss should be set at $3.862, slightly above the resistance level, to limit potential losses in case the price unexpectedly surges. The target price could be set at $3.41, the support level, aiming to capture a significant portion of the potential downside movement. Given the provided price data and forecast for Theta network, a cautious short-term investment strategy appears most suitable. The historical price shows a slight downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The current price sits close to the support level of $1.201, suggesting potential for a bounce, but the forecast indicates this might be temporary. Therefore, a short position is recommended to capitalize on the predicted price drop. An aggressive entry point could be around $1.25, slightly above the current price, allowing for a small buffer against unexpected upward movements. The stop loss should be set at $1.3, safeguarding against potential rallies. Target price could be set at $1.18, aiming to capture a significant portion of the anticipated decline, while staying above the strong support level of $1.201. This strategy prioritizes risk management by implementing a stop loss and focuses on short-term gains by capitalizing on the predicted price movement. Given the provided price data and forecast for Dogwifhat, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern with both upward and downward movements, while the forecast suggests a gradual increase in price over the next week. The historical data indicates potential for volatility. Therefore, an investment strategy focused on the medium term allows for capturing potential upside while mitigating the risks associated with short-term fluctuations. A long position is recommended, with an entry price around $2.55, aligning with the current price trend in the forecast. The stop loss should be set at $2.47, below the recent support level, to protect against significant price drops. The target price can be set at $2.70, aligning with the upper range of the forecast and potential resistance levels. This strategy allows for capturing potential gains, while managing risk within a reasonable time frame. Given the price trends and forecast for Stellar, cautious investment strategy would focus on a medium-term approach. While the historical prices show some fluctuations, the forecast suggests a gradual upward movement, with prices potentially reaching $0.099 in the coming week. The support price at $0.0959 provides a safety net, indicating that a significant drop is unlikely in the near term. Therefore, a long position is advisable for a medium-term investment strategy. An entry price around $0.0967, aligning with the current price and slightly below the resistance level, would be suitable. A stop loss should be set at $0.0959, below the support price, to minimize potential losses. The target price could be set at $0.099, aiming to capitalize on the forecasted price increase. This strategy allows for potential profit, while mitigating risk by utilizing support and resistance levels as key indicators. Based on the provided price information for Starknet, a cautious investment strategy would favor a short-term approach. The historical price data reveals a fluctuating trend, with recent prices hovering near the support level of $0.387. The forecast suggests a slight downward movement in the coming week, further supporting a short-term bearish outlook. Therefore, an investment strategy involving a short position is recommended. A suitable entry price would be $0.400, allowing for a small buffer above the current price. The stop loss should be set at $0.416, above the recent high, to minimize potential losses if the price unexpectedly surges. The target price could be set at $0.380, aligning with the forecast and offering a reasonable profit margin. This strategy aims to capitalize on the anticipated short-term price decline while managing risk effectively. Given the price trends and forecast for PENDLE, an investment strategy focusing on a short-term approach appears promising. The historical prices demonstrate a generally upward trajectory, with the current price hovering near the forecast and support level. The resistance level suggests potential for further upward movement. Therefore, a long position is recommended to capitalize on this potential price increase towards the resistance level. An ideal entry price for this strategy would be around $4.70, allowing you to buy in before the price potentially reaches its resistance. A stop loss order should be placed at $4.60 to minimize potential losses if the price unexpectedly drops. The target price could be set at $5.05, aiming to capture a significant portion of the potential upward movement, while leaving room for price fluctuations. This strategy leverages the positive price momentum indicated by the historical data and the forecast, aiming for a profitable short-term investment. Price history of Render shows a slight downward trend over the past 2 weeks. While the forecast suggests a continuation of this downward trend, the price is currently hovering near the support level of $5.096. Considering this, a short-term bearish strategy seems appropriate. To execute this strategy, we should enter a short position at the current market price, which is close to $5.14. The stop loss should be placed at $5.231, the resistance level, to minimize potential losses if the price unexpectedly rebounds. The target price for this short position should be set at $4.99, the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline, while managing risk through a well-defined stop loss. VeChain shows a mixed price trend over the past 2 weeks, fluctuating around the $0.022, $0.024 range. Although the forecast suggests a slight upward movement in the coming week, the price is currently near the support level of $0.02197. Considering the potential for consolidation or even a slight dip, a cautious approach is recommended. Therefore, a short-term investment strategy with a focus on a potential pullback would be suitable. A long position could be considered if VeChain manages to break above the resistance level of $0.02329 and demonstrates sustained upward momentum. For a short-term strategy, an entry price near the support level of $0.02197 could be considered. A stop-loss order should be placed slightly above the entry price to protect against immediate losses, and a target price could be set around $0.0227, aiming to capture potential gains from a short-term rebound. Based on the Binance Coin price history and the provided forecast, an investment strategy focusing on the long term appears to be the most suitable. Price has shown a consistent upward trend over the past 2 weeks, with a slight dip in the middle. The forecast indicates continued upward movement, suggesting a bullish outlook for Binance Coin in the coming weeks. Considering this positive outlook, a long position is recommended. The suitable entry price would be around $598, aligning with the recent price action and providing a margin of safety below the forecast. The stop loss should be placed at $585, just below the recent dip, and providing a buffer against potential downside. Target price can be set at $625, aligning with the highest projected price in the forecast, allowing for a healthy profit potential while capturing a significant portion of the anticipated upward movement. Conflux, as price history demonstrates a general downward trend over the past 2 weeks. The forecast for the next week suggests this downward trend might continue, with prices potentially falling below the current level. Given this bearish outlook, a short-term investment strategy focused on shorting Conflux appears to be the most suitable approach. An entry price of $0.155 aligns with the current price and the forecasted decline. To manage risk, a stop-loss order should be placed at $0.158, slightly above the entry price, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.14, capitalizing on the anticipated downward movement and ensuring profits before the price reaches the support level of $0.1517. This strategy allows for the potential to profit from the anticipated price decline, while implementing risk management measures to protect against adverse price movements. Based on the provided historical price data and the forecast for Worldcoin, a short-term trading strategy appears to be the most suitable approach. The historical price shows a volatile trend with recent fluctuations. The forecast indicates a slight downward trend over the next week, suggesting a potential opportunity for short selling. Given this outlook, a short position with an entry price of $2.24, the current price, would be a reasonable starting point. To manage risk, a stop-loss order could be placed at $2.28, slightly above the entry price. This would limit potential losses if the price unexpectedly moves upward. The target price could be set at $2.15, aligning with the forecasted price decline. This strategy capitalizes on the anticipated downward movement, while implementing risk management measures to protect against potential reversals. Based on the provided price information for Avalanche, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price change demonstrates a downward trend, with the forecast projecting further declines in the coming week, while the support price at $26.68 provides a potential floor. The resistance at $29.02 suggests limited upside potential in the near future. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decrease. An entry price of $26.80, slightly above the support price, allows for some buffer while still entering the trade at a potentially favorable point. The stop loss should be set at $27.10 to limit potential losses if the price unexpectedly rebounds. Target price could be set at $25.80, aiming to capture a reasonable profit before reaching the support level. This strategy prioritizes risk management and capital preservation, while seeking to profit from the prevailing bearish sentiment in the Avalanche market. Given the price trends and forecast for Jupiter, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trend, with the current price hovering near the support level of $0.887. The forecast predicts continued upward movement, reaching up to $1.12 over the next week. This suggests a bullish outlook for Jupiter in the short to medium term. Therefore, an investment strategy involving a long position is recommended. An ideal entry price would be around $0.978, aligning with the current price and allowing for potential upside. To manage risk, a stop-loss order should be placed at $0.95, slightly below the recent price dip. A target price of $1.10 would capitalize on the bullish forecast while providing a reasonable profit margin. This strategy aims to leverage the anticipated price increase in Jupiter over the next few weeks. Based on the provided information for EOS, a cautious investment strategy with a medium-term perspective is recommended. The historical price data reveals a fluctuating trend with recent dips, while the forecast suggests a continued downward movement. Although the support price at $0.4565 provides a potential floor, the resistance at $0.4938 indicates a significant hurdle for upward momentum. Given this scenario, a short position appears more appealing. To execute this strategy, an entry price of $0.470 would be appropriate, aligning with the current price and the projected downward trend. The stop loss should be set at $0.485 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.450, aiming to capitalize on the anticipated decline towards the support level. This strategy balances risk and reward, allowing for potential profits while minimizing downside exposure. Based on the provided price history and forecast for TRON, a short-term investment strategy appears to be the most suitable. The historical prices show a slight upward trend, but the forecast indicates continued growth. The current price is close to the forecast's opening point, suggesting a potential for further gains. Therefore, I recommend taking a long position on TRON. A good entry point would be around $0.164, aligning with the current price. To manage risk, set a stop-loss order at $0.16, protecting against potential price reversals. The target price could be set at $0.171, which aligns with the forecast's highest predicted price, allowing for potential profits within the short term. Given the historical price data and the one-week forecast for SE, a cautious short-term investment strategy is recommended. The historical prices show a downward trend, and the forecast suggests further declines. The current price is near the resistance level, indicating a potential for a pullback. A short position is advisable to capitalize on this anticipated decline. For an aggressive short-term investment strategy, an entry price of $0.44 could be considered. The stop-loss should be set at $0.453 to protect against any unexpected price recovery. The target price should be set at $0.37, aligning with the forecasted lowest price, allowing you to take profits before the market potentially hits major support. Based on the provided price information for Shiba Inu, a short-term investment strategy appears to be the most suitable approach. The 2-week price change shows a slight downward trend, with the forecast indicating a potential for further declines in the short term. Considering the current price hovering near the support level of $0.0000182 and the forecast suggesting a potential drop to around $0.0000170, a short position could be profitable. An aggressive entry price could be around $0.0000186, aligning with the recent historical high. A stop loss should be placed at $0.0000190. $0 to mitigate potential losses if the price unexpectedly rises. The target price could be set at $0.00000170, aiming to capture the anticipated decline. Given the 2-week price change and 1-week forecast for Dogecoin, a medium-term investment strategy appears to be the most suitable approach. While the recent price history shows some volatility, the forecast indicates a consistent upward trend. The current price is hovering near the support level of $0.16326, suggesting a potential buying opportunity. Therefore, a long position is recommended, aiming to capitalize on the predicted price increase towards the resistance level of $0.19971. An entry price of $0.165 could be considered, allowing for a margin of safety below the support level. The stop loss should be placed at $0.158 to minimize potential losses, while the target price could be set at $0.190 to capture a significant portion of the projected price appreciation. This strategy balances risk and reward, aiming for moderate gains over a medium-term horizon. Hooked Protocol's price history shows a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $0.3805, and the resistance is at $0.443. Considering this bearish outlook, a short position seems to be the most suitable strategy to capitalize on the anticipated decline in prices. A conservative investment strategy would involve entering a short position at the current price of $0.41, with a stop loss set at $0.431 to minimize potential losses if the price unexpectedly rebounds. The target price would be $0.38, aiming to capture a portion of the projected decline. This approach allows for a controlled risk while taking advantage of the prevailing bearish sentiment surrounding Hooked Protocol. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility, with a recent dip towards the support price of $0.3168. The forecast suggests a slight decline in the coming week, hovering around $0.339 to $0.351. The resistance level at $0.3608 indicates potential for upward movement, but the current forecast and recent price action suggest caution. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An entry price of $0.340 would be ideal, aligning with the forecasted price and allowing for potential profit. The stop loss should be set at $0.348 to protect against any unexpected price surges. The target price should be set at $0.320, slightly below the support level, allowing you to take profits before the market potentially rebounds. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook for Aevo. Based on the provided data for Coin, price history reveals a downward trend over the past 2 weeks. The forecast suggests this downward momentum will continue, with prices potentially dropping to around $0.00708 over the next week. This bearish outlook, coupled with the price history and forecast, indicates a short-term opportunity for profit. Therefore, an aggressive investment strategy would involve taking a short position on Coin. A suitable entry price would be $0.00713, aligning with the current price and the immediate resistance level. The stop loss should be placed at $0.0072, safeguarding against unexpected upward price movements. The target price could be set at $0.00674, which is slightly above the support price and aligns with the predicted price decline. This strategy capitalizes on the anticipated downward movement of Coin while managing risk through a well-defined stop-loss order. Sun Coin's recent price history shows fluctuations, but overall, price has been relatively stable. The forecast indicates a slight downward trend over the next week. Considering this, a short-term investment strategy with a short position seems appropriate. The entry price for this strategy would be $0.0183, aligning with the current price and offering a potential entry point before the predicted decline. The stop loss would be set at $0.0188, slightly above the current price. To protect against any unexpected upward movement, the target price would be $0.0175, aligning with the support price and the projected lower bound of the forecast, allowing for potential profit capture before the price potentially finds support. Based on the provided price information for PEEP, a cautious investment strategy is recommended. The 2-week price change shows a slight downward trend, with the forecast indicating continued modest declines. While the support price is relatively close, the resistance is somewhat distant, suggesting limited upward potential in the short term. Given these factors, a short-term investment strategy is advisable. A long position is not recommended at this time due to the bearish outlook. To implement a short-term short strategy, an entry price near the current market price would be appropriate. The stop loss should be set slightly above the current price to minimize risk in case of an unexpected price surge. The target price should be set at a level that aligns with the forecast's predicted decline, allowing for potential profit while managing risk. This approach allows for capitalizing on the anticipated price decrease while mitigating potential losses. Based on the provided price information for TON coin, a cautious short-term investment strategy is recommended. The historical price data reveals a volatile trend with recent fluctuations below the resistance level of $5.182. The forecast price suggests a continued downward trajectory, potentially reaching as low as $4.96. This bearish outlook, coupled with the proximity to the support price of $4.753, indicates a higher probability of a short-term decline. Therefore, a short position on TON coin is advisable. An entry price of $5.05 aligns with the current price and the downward trend. The stop loss should be placed at $5.12 to minimize potential losses. If the price unexpectedly rebounds, the target price should be set at $4.85, anticipating a moderate decline towards the support level. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a well-defined stop loss. Based on the provided Bitcoin Cash price information, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent dips followed by upward surges. The forecast suggests continued upward momentum, with prices projected to reach above the current resistance level. This indicates a potential for capital appreciation in medium term. Therefore, a long position is recommended. An ideal entry price would be around $368, aligning with recent price action and below the current resistance. A stop loss could be placed at $357, slightly below the recent low point. To mitigate potential downside risk, the target price should be set at $400, aiming to capitalize on the projected price increase and reach the resistance level. This strategy balances risk and reward, allowing for potential profit from the anticipated upward trend, while minimizing potential losses. Based on the provided information about Chainlink, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data shows a relatively stable upward trend, with the price hovering around $11. The forecast price suggests a continuation of this upward momentum, reaching $12 within the next week. This indicates a potential for price appreciation, making a long position attractive. To implement this strategy, an entry price of $11.20 could be considered, slightly above the current price and below the resistance level of $12.11. a stop-loss order could be placed at $11.00 to limit potential losses in case the price drops unexpectedly. The target price could be set at $12.00, aiming to capture a significant portion of the anticipated price increase. This strategy capitalizes on the short-term bullish outlook for Chainlink, while incorporating risk management measures to protect against potential downside movements. Given the price trends and forecast for Polkadot, a medium-term investment strategy appears most suitable. While the historical prices show some volatility, the forecast indicates a gradual upward movement. The current price sits near the support level of $4.024, suggesting a potential buying opportunity. However, the resistance at $4.206 might limit immediate price surges. Therefore, a long position is recommended for a medium-term investment strategy. The entry price could be set at $4.13, aligning with the current price and the forecast's upward trajectory. The stop loss should be placed at $4.024, safeguarding against a sudden drop below the support level. The target price could be set at $4.206, aiming to capture the potential upside momentum and reach the resistance level. This strategy balances risk and reward, allowing for potential profits from Polkadot's anticipated price appreciation over the medium term. Given the current price trends and the forecast for Near protocol, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility, with a recent dip below the $4.65 resistance level. However, the forecast suggests a slight upward trend over the next week, potentially reaching around $4.62. This indicates a period of consolidation before a potential breakout. Therefore, a long position is recommended, aiming to capitalize on the predicted price increase. An entry price of $4.35, slightly below the current price, allows for a margin of safety. The stop loss should be set at $4.12, the support price, to minimize potential losses. The target price can be set at $4.65, the resistance level, aiming to capture a significant portion of the anticipated upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in a volatile market. Given the price trends and forecast for stacks, cautious investment strategy would focus on a medium-term approach. The historical prices show a volatile trend, with recent dips suggesting a potential consolidation period. The forecast indicates a gradual upward movement, but the price remains below its resistance level. In this scenario, a long position is advisable, aiming to capitalize on the potential for a price increase towards the resistance level over the medium term. An entry price of $1.83 aligns with the current price and the forecasted price. The stop loss should be set at $1.795, the support price, to protect against a significant price drop. The target price should be set at $1.875, the resistance level, allowing you to take profits when the price potentially reaches its resistance. This strategy allows for a balanced approach, acknowledging the volatility while capitalizing on the potential for upward movement in the medium term. Given the price trends and forecast for Aptos, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a slight upward trend, although with some volatility. The forecast indicates a continued upward movement, albeit at a moderate pace. The support price at $9.34 provides a safety net for potential price dips, while the resistance at $10.21 suggests that further upside momentum is possible. Therefore, a long position in Aptos is recommended for a medium-term investment horizon. A suitable entry price would be around $9.70, allowing you to buy in at a relatively attractive price point. The stop loss should be set at $9.35 to protect against significant price declines. The target price could be set at $10.15, aiming to capture a substantial portion of the potential upward movement, while remaining mindful of the resistance level. This strategy balances risk and reward, capitalizing on the positive price outlook for Aptos, while mitigating potential losses. Based on the provided information for Litecoin, a short-term investment strategy appears to be the most suitable approach. The recent price history shows a slight decline, with the current price hovering around the support level of $70.14. While the forecast suggests a potential upward movement, the short-term outlook remains somewhat uncertain. Entering a long position at this juncture carries a higher risk of price fluctuations. Therefore, a short-term short position is recommended. An ideal entry price would be around $71, aligning with the recent price action and slightly above the support level. The stop loss should be set at $72, allowing for a small buffer against unexpected price surges. The target price could be set at $69, aiming to capitalize on a potential retracement towards the support level. This strategy allows for a controlled risk exposure and the potential for profit from a short-term price correction. Based on the provided information for Uniswap, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements. The forecast suggests a continued upward trajectory, with prices potentially reaching $8.3 within the next week. The support price at $7.366 provides a safety net, while the resistance at $8.062 indicates potential for further growth. Therefore, a long position in Uniswap is recommended for a medium-term investment horizon. An ideal entry price would be around $7.75, allowing you to enter the market as prices approach the support level. A stop-loss order should be placed at $7.37 to minimize potential losses. The target price could be set at $8.1, aiming to capitalize on the anticipated upward movement and reach the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term. Given the price trends and forecast for Bittensor, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a recent downward movement. The forecast suggests Bittensor could drop further, reaching a low point around $522. The support price is at $485.3, indicating a potential floor for the price. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $530 would allow you to enter the trade near the current price level, while setting a stop loss at $544 would protect against unexpected upward price movement. The target price should be set at $500, aiming to capture a decent profit before reaching the support level. This strategy prioritizes risk management and aims to capitalize on the short-term bearish outlook for Bittensor. Based on the Internet Computer price information provided, a medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile but generally upward trend. While the forecast suggests a slight increase in price over the next week, price remains relatively close to its support level. This indicates a potential for consolidation before a further upward movement. Therefore, a long position is recommended. The entry price should be set at $7.85, slightly below the current price, allowing for a margin of safety. The stop loss should be placed at $7.65, the identified support price, to limit potential losses. Target price can be set at $8.35, aligning with the resistance level and reflecting the potential for a moderate price increase within the medium-term time frame. Artificial Superintelligence Alliance shows a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $1.323, while the resistance is at $1.518. This suggests a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. Given the current price hovering around $1.34, and the forecast suggesting a drop to $1.31. An aggressive short-term investment strategy could involve entering a short position at $1.34. To manage risk, a stop-loss order should be placed at $1.36 to limit potential losses if the price unexpectedly rises. The target price should be set at $1.29, slightly above the forecast lowest price, allowing for profit taking before the market potentially rebounds. This strategy aims to capitalize on the short-term bearish momentum of artificial superintelligence alliance while mitigating potential risks through a well-defined stop-loss order. Based on the provided information for Optimism, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent dips suggesting a potential for further decline. Forecast price indicates a gradual downward movement over the next week. Aligning with this bearish sentiment, the current price is situated near the resistance level, increasing the likelihood of a pullback. Therefore, a short position is recommended. An aggressive entry price of $1.69 could be considered, aligning with the immediate forecast. To mitigate risk, a stop loss at $1.73 would be prudent, above the current price and the immediate resistance level. The target price should be set at $1.56. Aiming to capitalize on the potential price drop towards the support level. This strategy leverages the short-term bearish outlook and aims to profit from a price decline before the market potentially finds support. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $19.3. The forecast suggests Ethereum Classic might continue to decline slightly in the coming week, with the lowest predicted price being $18. Considering the potential for further downside movement and the proximity to the support level, a short position is advisable to capitalize on the anticipated price decrease. For this strategy, an entry price of $19.0 would be ideal, allowing you to enter the short position just above the current price. The stop loss should be set at $19.5 to protect against any unexpected upward price movement. The target price should be set at $18.2, aiming to capture a portion of the potential price decline while staying ahead of the predicted lowest price. This strategy emphasizes risk management and aims to profit from the short-term downward price movement of Ethereum Classic. Given the Ethereum name service price history and the provided forecast, a medium-term investment strategy appears promising. While the price has shown some fluctuations, the overall trend suggests the potential for upward movement. Forecast predicts a gradual increase in price over the next week, reaching $18. This positive outlook, combined with the relatively low support price of $15.85, indicates a favorable risk-reward ratio for a medium-term investment. Therefore, I recommend a long position on Ethereum name service. A suitable entry price would be around $16.50, allowing you to buy in before the anticipated price increase. The stop loss should be placed at $15.90 to minimize potential losses in case the price drops unexpectedly. The target price could be set at $17.80, aiming to capitalize on the full potential of the projected price increase. This strategy allows for a balanced approach, capturing potential gains while managing risk effectively. Based on the provided price information for Solana name service, a short-term investment strategy appears promising. The historical prices demonstrate an upward trend, with the recent price hovering near the support level of $0.2318. The forecast suggests continued upward movement, reaching up to $0.256 in the coming week. This indicates a potential for capitalizing on short-term price appreciation. Therefore, I recommend a long position on Solana name service. An ideal entry price would be around $0.24, just below the current price. A stop-loss order should be placed at $0.232 to mitigate potential losses if the price unexpectedly drops. The target price could be set at $0.255, aiming to capture a significant portion of the projected price increase. This strategy allows for a balanced approach, maximizing potential gains while managing risk effectively within a short-term investment horizon. Based on the provided information for Aave, a cautious medium-term investment strategy appears most suitable. The 2-week price history demonstrates volatility, with a slight downward trend, while the forecast suggests a further dip in the short term. The long-term outlook remains uncertain. The support price at $137.42 presents a potential buying opportunity if the price declines to that level. Therefore, I recommend a long position with an entry price around $140, a stop loss at $138, and a target price of $155. This strategy aims to capitalize on a potential rebound from the support level, while mitigating risk. The stop loss will protect against further price declines, and the target price represents a reasonable upside potential based on the historical price range and the forecast. This approach allows for a medium-term investment horizon, giving the market time to potentially recover, and for Aave to move towards its target price. First, analyzing the Injective price history and forecast, we see a potential for short-term price fluctuations. While the price has recently dipped, the forecast suggests a slight upward movement in the coming week. Considering this, a short-term long position strategy appears promising. The entry price should be set at $20, aligning with the current price and the support level. To manage risk, a stop-loss order at $19 would be appropriate. This protects against significant price drops. The target price could be set at $20.44. The resistance level, aiming to capitalize on the potential upward movement. This strategy allows for a balanced approach, aiming for modest gains within a short time frame, while mitigating potential losses. Polygon's recent price history shows a fluctuating trend with a downward bias. Although the forecast suggests a slight dip, price remains relatively close to the support level of $0.3201. Considering these factors, a short-term investment strategy focusing on a short position appears to be the most suitable approach. Entering a short position at the current price of $0.335, with a stop loss set at $0.345 to mitigate potential upward price movements, and a target price of $0.315, aiming to capture potential price decline towards the support level, presents a promising opportunity for short-term gains. This strategy leverages the anticipated price dip while managing risk effectively.